Hey everyone, it's Nancy, the nurse practitioner here today with a new video for you. Hope you all are doing well. Today we are going to talk about something called a HECM. HECM, I'll say it again. I'm going to introduce you to somebody named Alfie Schloss. He's a licensed mortgage loan originator. He's sponsored by the American Advisors Group, or AAG, and he's actually involved with, I'll just say the word reverse mortgage because a HECM is a reverse mortgage, so stay with me here, everyone. This is a plan for people who want to stay in place or want to retire in their own homes and use their homes as equity to give them a safe retirement and a nice place to stay. So we're going to learn all about this from Alfie. He teaches continuing legal education on this subject for organizations that includes Marino Legal Institute and the New York County Lawyers Association. So he's got a lot of expertise. He's been doing this since 2004. I'm really excited to have him help us with this because a lot of people do want to stay in their homes and they don't know how and can they somehow pull off of their finances of their home. And it's a really hot subject, especially for baby boomers who are aging in America. And I had a lot of patients, Alfie, who did stay in their homes and their children were visiting and they had 9 rooms, half of them never occupied, but they really, really wanted to stay there. And I think they felt like they couldn't afford to stay there. So this is really a cool avenue for them. So I just want to go over with everybody what we're going to talk about today. What is a HECM? I love that word so far. What are the myths about a reverse mortgage or a HECM? Who owns the home when you get a HECM or reverse mortgage? And should you be considering one for yourself? Are you a good candidate for one? And then we have a really great story in the end that Alfie Schloss is going to share with you about his own experience with a HECM. Can't stop saying that word. Okay, so let me introduce you to Alfie. Alfie, I'm so glad you're here with me today. Excited to hear what you have to tell us. So what's a HECM?
Thanks,
What's a HECM?
Thanks, Nancy. Well, a HECM is an acronym. It's for Home Equity Conversion Mortgage. The term reverse mortgage is actually a term that was coined back in the 1960s, and it serves a purpose, but it's gotten such a negative connotation over the years because initially when reverse mortgages started, they were predatory loans and people were giving up the future equity of their home to get it. So a home equity conversion mortgage, which is the government insured, federal government HUD insured reverse mortgage, is insured by HUD. It is a safe product, and what made it non-predatory was the government stepped in 1988 and realized that there was a problem with this product, and Congress passed legislation that was signed by President Reagan back then, which created this program under HUD that allows lenders who are allowed by HUD to do this, to give people access to some of the equity in their home through this borrowing instrument. But what's unique about it is that they never have to make payments on this mortgage as long as they live in their home. So they can access the funds that are available to them through this mortgage, through a line of credit, through monthly income that will last them a lifetime. It's called a tenure payment, TENURE, or as a term payment, which is useful in some cases. So for instance, if you have someone who's terminal and is bedridden and they want to keep them in the home, you can get more than what's available for the rest of one's life for a short period of time to be able to pay for home care or whatever is necessary, home modifications, bringing in whatever is necessary to keep them there.
So Alfie, to move on, because we have a bunch of questions here, it's really important that everybody listen to that, because you can listen and see if you're in that category, but everybody's situation, home payments, home worth is different. And Alfie is involved in New York, Connecticut, and New Jersey, correct?
Correct. I've
But
been
he will
licensed.
help you find a representative or specialist in your area of America if you are to reach out to him. And at the end, we will give you his phone number and his email. And this way you can ask more questions that are individual to you. But at least you kind of know what the product is about. And thank you for the background, because maybe that's where people got stuck about the reverse mortgage being a bad, dirty word, whatever. And now that it's called a HECM, we can actually start all over with something good. So let's move on. So there are some myths about this, and there's one of them, is it a bad word? Can we talk
Well,
about the worst, why so many people say it's the worst thing you can do?
well, again, because it was a predatory loan back then,
Okay.
one of the first loans I ever did was refinancing someone who was in an ancient reverse mortgage, who had 3 more months before their loan became ended, and they were getting $500 a month for 15 years. That was the loan that they signed up for. But at the end of 15 years, the money stopped, and the lender owned their home. So, which was the way they used to work. So when I refinanced her, we were able to turn it into a lifetime payment, more than twice what she was getting for the 15 years, because her home had appreciated, and she owned her home again. So that's the myths are that you're going to lose your home, that the bank owns your home, that it's the worst thing you can do. The answer is every situation is different. There are a lot of people that I've talked to that shouldn't do a reverse mortgage because they can't manage their money, and they're going to mismanage the reverse mortgage. They should sell their home. They should downsize. But for people who it works for, it's a godsend. I didn't mention earlier that there's an age requirement for a reverse mortgage.
Oh, really?
that someone has to be 62 to qualify. And if there's a younger spouse who's not 62, they can still do the loan, but there's as a non-borrowing spouse. But it's not something that I recommend unless it's a really desperate situation, and I can, and I don't want to spend a lot of time going over that because it's a rare thing. Okay?
Yeah, and everybody's situation is different, and
exactly.
And if your health is poor, it doesn't matter. You still could possibly be eligible for this.
Correct. I mean, I'm doing one tomorrow where a gentleman who lives in a home whose son is doing the reverse mortgage for him as power of attorney because his father is too ill, but he wants to keep him home.
Can I ask you
another need the money to pay for care.
I know you have a gazillion stories because I know what you feel about this. What about people with Alzheimer's, which is a large population of people I speak with that are no longer capable, but could be living 20 more years in their home and are walking and maybe progressing through, but not advancing quick enough? If their children are a power of attorney for them, which is really important, and we've already spoken to that with them.
Yeah.
You know, their parents are changing mentally to take over some of those issues. Are they good candidates then? Possibly.
It's possible. And the fact is that it's not, the monies from a reverse mortgage are not income. So therefore, it is possible to actually have Medicaid taking care of you at home and still have a reverse mortgage. So there's a lot of little details.
Now that's really cool.
We could get lost in the weeds about all that here.
I feel like we are a little, but I just want to kind of touch on these things because people each have their own questions, but there are a gazillion people with dementia and Alzheimer's in America right now. And I think their children, some of them are young, 40, 50, taking care of their 65-year-old mother. And they are in these big homes and they're like, how are we going to, she could live to 90 like her mother. And they're worried about that. And the other thing is finding aid service and whatever. But if they can get Medicaid to cover the aid service and still stay in their home, that would be a blessing, like massive.
I've done many situations like that.
Okay, so let's go on. I think we covered the myths and we now know that this could be a golden ticket for, not a golden ticket, but maybe a golden parachute, we'll call it, for some people out there who are using their homes to their advantage, as a home equity is, in that wording. So who owns the home when you do a reverse mortgage, Alfie?
Well, again, you do not give up ownership of your home when you do a reverse mortgage. And in fact, if the house is if you already have given up ownership and you've put it into an irrevocable trust,
Mhm.
we can still probably do a reverse mortgage with a trust, a revocable or an irrevocable trust. So the answer is you still own your home, or the trust still owns your home, and you're not giving up ownership. It's just a mortgage. It's just a mortgage you don't have to make payments on.
Oh my gosh, remind me to talk to you about somebody when we're off this video who I've been working with, whose mother has severe dementia. She doesn't speak well. She lives in a beautiful section of Connecticut, and she can't afford an aid because the house is in a trust, and she was told she has to wait a year before she could even touch the house. Let me talk to her later. But
Yeah, we probably should discuss that with the attorney. Take a look at the trust.
Okay, perfect.
We do trust reviews at no cost to the borrower.
Okay, so that's really good to know to everyone, that this doesn't cost you anything to speak to Alfie. How do you get paid, Alfie, while we're at it?
We get paid if we do a loan, but at the end of the day here, I love the fact that I can help people.
Yes.
I'm solution oriented. I'm not paycheck oriented. I'm solution oriented. If I can help someone improve their quality of life, even with some advice, and sometimes the advice is wake up and sell your house and downsize.
Yeah.
So it's really the trick here is to really give people good advice.
Okay, so I know we have some questions here are going to leave us running in the weeds again, which is who is a good candidate for a HECM?
Okay, so
You want to give your
a person who,
yeah.
The first criteria is you own a home.
Yes.
That and it can be a 1 to 4 family home, or an FHA approved condo, or a planned unit development, a PUD. Even a double wide on owned land that meets FHA standards can be done. But at the end of the day here, if you own a home, you're living in the home, you are comfortable in that home, you want to remain in that home, then you should be considering a reverse mortgage. Especially if you've paid off your mortgage, because you can just access the equity if you need it. And if you don't need it, it's a line of credit, and that line of credit is growing regardless. Whatever you haven't used in your line of credit is growing and guaranteed to grow at the same interest rate you would be charged on what you borrowed. So it's, and when I talk about my story later, I'll go into some of the details about that. It's really quite extraordinary.
Okay, then I have a question for you. We live in a high tax area, this tri-state area. And I'm sorry about all of you all over the country, but California is high, I'm sure too. And any place in between, I don't know what Idaho is like. I'm just saying, as everyone's listening here, that we are in a high tax area, and the taxes can be like $15,000 a year in a small home in Connecticut. How does that get paid? Can they take it out of this home equity?
Yeah, well, one of the reasons people take reverse mortgages is because they can take the money to pay their taxes. The requirement is that you own your home, that you remain in your home, that it's your primary residence. You pay your taxes and you pay your insurance. Those are the requirements of the loan. If you haven't been paying your taxes, then the government requires that we set up a payment, a set aside from the monies from the reverse mortgage to pay them for you. So but taxes is a big factor here in the Northeast. The taxes on my home are almost $15,000 a year.
Yeah.
So, yeah.
And I just met with a girlfriend of mine for lunch yesterday, and she said that her father, she promised the family, he said, please keep the house after I die. He made sure there was enough money, and the sister's living in the house, and she's like a squatter. And she's worried, she's paying out of his money, the taxes, all this money is dwindling, the lawn service, the electric bill, and maybe this is a situation to keep the promise of dad to keep the home. She's another one I'm going to send your way. All right. Thanks, Alfie. Hey, this is important. People need to turn every rock over when we become to this point where our parents need, or we need, help financially to make.
Yeah, so people need the money to make home modifications. They need the monies to make to pay the taxes. They need the monies for home aids. They need the money for any possible things. Paying. If
even health insurance,
if your quality of life, again, I hate to jump into stories, but one of my favorite all-time loans was for a woman in Westchester whose quality of life initiative was she wanted to have grandchildren, and she paid for adoptions out of a reverse mortgage for her son and daughter-in-law to have children. And she has 3 grandchildren by using a reverse mortgage to pay for it. And it's a wonderful quality of life initiative.
I would never have thought of that one, but okay.
Yeah, but again, I can't make this stuff up. These are true stories.
Okay, so we talked about the good candidate. Who's not a good candidate?
Well, first of all, someone who is totally financially irresponsible.
What does that mean exactly?
Who doesn't pay their bills, who doesn't know how to manage their money.
They're into someone who they're into homes, they own a lot of money on things.
Correct. The person who lives in a house that's way too big for them by themselves, and they are stuck. The answer is yes, they can do a reverse mortgage, but the money's actually going to be going up the chimney because they're heating this whole house when they're using one or 2 rooms. It's, there's a sense here, people, the other people who are not good candidates are, well, first of all, if you live in a condo and it's not FHA approved, you can't get a reverse mortgage.
And you mentioned
because 99% of condos are not FHA approved, unfortunately. So, and even though there is a way to get them approved, most of them don't want to be approved, and it's a problem. So people living in condos.
Okay, so they have to be FHA approved.
And co-ops are totally not allowed by New York state law. What
about subsidized housing? People living in subsidized housing. They don't own it, right?
Subsidized housing is not owned. It is usually rented. So you have to own the home. I mean, you have to have equity and you have to own the home. You have to have at least 50% of the equity in your home. Obviously, the younger you are, the more equity you have to have in order to qualify, because you cannot have another mortgage. We have to pay off any debt that you have with the reverse mortgage. So in some cases, all you may really accomplish is no longer making payments on your mortgage.
So, one thing, Alfie, and then we're going to get to your story because we're running out of time, but I was thinking, wouldn't it be great if this person with this big home, because I took care of this family, all these brothers and sisters all moved into a high ranch in Rockland County where I was doing my house calls, and they all took care of each other, and they were all, their spouses all passed away, and they each had a bedroom, and one by one they held vigil and took care of Mary and then Eddie and whatever. And they even had an apartment downstairs that they would not rent out because they were afraid. And they could have put an aide down there that could have taken care of all of them. And they sort of both ended up in a nursing home, and the house paid for everything. And to think about, I'm a baby boomer and there's so many of us, and I have 7 brothers and sisters. I can see us all someday all living in a house together, only with the ones I really like. But or your best friends, that are like family, and you have this loan on the house, and then they pay rent, and you could really have a great time together and not be alone, and share an aide, and share a cook, and share a cleaning lady.
I think you have to be creative in how you plan to age and how you plan to live in aging. This is a tool. It's not for everyone. It's a tool. And a lot of financial advisors are recommending it to their clients now to look into it, because it's it really has some merit.
It sounds really cool. So Alfie, tell us all about your story in like 4 minutes.
Well, I'm 68. My wife and I are both 68 years old. We live in Rockland County, New City, New York. We own our house is a ranch. We purposely bought a ranch because neither one of us wants to end up in an assisted living or a nursing home. And we don't want to live in an apartment. We like living in our own home. We wanted to be able to stay here. So we purposely, when we bought the house, only looked at ranches and made that decision based on that. I had a burst brain aneurysm in 2009 and almost died. And before I had the aneurysm, I started the process of applying for long-term care insurance because we wanted to make sure that we had monies to keep us home. Well, because I had the aneurysm, I couldn't get insured for at least 5 years. And then when I looked into it 5 years later, and obviously I recovered and I'm fully functional, I found out that the cost of getting maybe 3 years of coverage with long-term care insurance for us to stay home would cost us about $10,000 a month. And I said, well, that's ridiculous. We could live 20, 25 years here without needing long-term care. We're going to spend hundreds of thousands of dollars on insurance that we may never use. So instead, we got a reverse mortgage. In 2017, we got our own reverse mortgage on our house. At the time, we owed about $80,000 on our mortgage, but we had to pay that off through the reverse mortgage. And while we were paying our mortgage, we were spending about, with taxes and insurance and everything, about a little over $3,000 a month to pay for our mortgage and our taxes. Right. So what we did since we got the reverse mortgage is we've been paying the same amount to pay down our reverse mortgage, just like the mortgage. So where our initial mortgage would have been done when we were 70, we just finished paying down our reverse mortgage last month. And we now owe $100 on our reverse mortgage. And we have a line of credit of $329,000 on a house that's worth $500,000. That line of credit is currently growing at about 4.5% a year and compounding tax-free. By the time we're 82, our line of credit will have grown to about $700,000. And by the time we're 92, it'll be over $1.4 million. Our house is currently worth $500,000. So, and the beauty of the reverse mortgage for me is that we have this access to this money if we need it for long-term care, or for, if our investments go south or something catastrophic happens with the economy, we have a way of turning on income if we need it in the future. And it gives us peace of mind. Yeah. We're paying our own taxes. In fact, I'm going to the clerk's office on Tuesday to pay our current school tax bill, which is over $7,000. Yep. If I needed to, I could take the money from the reverse mortgage. Fortunately, I don't. But we're just letting it sit there to grow. But I have other clients doing that as well. But for me, it's the cheapest form of insurance for longevity. That's the way I look at it.
Well, of course, people should have their little eggs in other baskets too, of course, right?
Yes, but financial planners tell you to have 2 or 3 years of monies put aside for emergencies. But if you have a line of credit with a reverse mortgage, you don't have to keep 2 or 3 years of money set aside for emergencies, because if you keep it in the bank getting less than 1%, you're losing money all the time. Whereas if you use, it's just not.
Yeah, you have to see that
correlate.
You have to see that you're actually making money for your time.
If you use this money strategically, you can do extremely well.
I got one more question for you that I didn't even think of, and then we're going to need to close. But is there closing costs? Is there some kind of a closing cost?
Well, the costs are one of the big factors. A reverse mortgage today on a house worth the maximum, which is $765,600. That's the most a home can be worth for the purposes of the HECM product. Okay. You're looking at probably around $25,000 in finance closing costs. So it's a steep cost, but out of pocket, you're only paying for an appraisal, which is generally between $500 and $550, depending on which state you're in. New York is different than New Jersey or Connecticut. Little differences: 500, 520, 525, 550, and possibly for the required counseling, which is one of the main functions of HUD, is to require that anyone who wants to get a reverse mortgage has to meet with an independent HECM counselor before they can even apply for a reverse mortgage. And that's part of the process as well, so that they're actually talking not only to a loan officer who's going to make money by doing the loan, but also to an independent third party who has no stake in whether they get it or not.
Right.
And just is making sure that it's the right fit for them and that they qualify, and to also see if they have other entitlements that they may not be aware of.
That's really, really good.
Yeah.
That brings it all together, so you know you're signing on the dotted line for what really will work for you. Hey, you know, I never wanted to be old and poor. That was one thing I told all the boyfriends I met along. You know, one thing that's important is, and I took care of a lot of people that were old and poor. And, you know,
Yeah.
we need to really think about this. And a lot of people do have homes. So I love this whole concept. I think it's wonderful. I'm glad I ran into you, Alfie. We're going to spread this out for everyone to see, because they need to know that it exists in America. And Alfie can be reached at 914-275-3361, everyone. I will put some information on my Facebook page just about that, Alfie, if that's okay.
And you can put my web address and my email address. Excuse me?
Tell them your web address and your email.
Oh yeah, you had to ask me a question that's hard to answer.
Oh wait, I got it in front of me. I'm just testing you.
Oh, okay. I don't really.
Well, I just have A for Alfie, Schloss, SCHLOSS, you know, SS as in Sam, at aag.com.
That's my email address, correct.
That's the email address. And and the web address I also have is aag.expert/Alfie's Schloss, which is SCHLOSS.
Right, that's the language. So, but the best thing to do is to email me or call me, and I respond to everyone, and I don't just say no, you're not eligible, goodbye, because that's not the way I look at it. I really am looking. I have enormous, you know, one of the reasons I know you, Nancy, is because I always look for resources.
And me too. I'm here to just help us age in America and all over the world as best we can, because we need this information. And you can go hunting on the web, but you really want to see the warm part of this and the human side of us, discussing and helping people from the reality of it all, the humanity side of it.
Absolutely.
And everyone, hey, thank you, Alfie, for coming. Alfie Schloss.
Thank you very much.
And thanks from Nancy, the nurse practitioner here at Caregiver Success. If you like my videos, please subscribe to my YouTube channel at Caregiver Success. And hey, I also have a book out for caregivers and for us as we age called Caregiver Success. And you can get that on my website, www.caregiversuccess.com. I wish you all well and peace till the next video. Take care, everyone. Bye now.